Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, Beimnet, welcome to Galaxy Brains.
Thanks for having me.
Exciting times. We'll talk CPI. Was CPI good or bad? I missed it. I've been busy with this market structure bill.
It was good. Core CPI came in 0.2.
So inflation is it down or is it decelerating?
It is decelerating. Prices are still moving higher, just at a
Slightly
rate.
slower than
Correct.
expected?
Yeah.
That's
and like the big part of it is like, shelter prices have come off a lot,
I've
right?
seen
Owner's
that.
equivalent rent. And I think that has to do with a couple of different things, but a lot of it is because, there's supply coming on, right? And so there's just more apartments that need to get rented and similar amounts of demand. And then you've also in terms of the supply side, like there's fewer people in the country because we're deporting
That's true.
a bunch of people.
Right.
I think generally speaking, prices have been cooling at a rate that is acceptable.
Yeah.
And the labor market, while it has shown a little bit of weakness, is actually still pretty strong. You have an unemployment rate at 4.4%. There are some caveats to that. Obviously underemployment is incredibly elevated at 8.3%.
And a lot of the hiring has been in home healthcare services, right? Not like long-term growthy.
Correct. And if you look at fresh college grads, I think
how are they doing? How are the kids doing?
Very poorly.
Oh, man.
40% of them are doing jobs that aren't relevant to what they studied.
That's terrible.
And so the youth unemployment rate, is ticking massively higher. I think it's actually it's close. It's pretty close to 10%. So fresh college grads are having a difficult time in the job market. But high level growth is strong. I think Atlanta GDP now forecast for Q1 GDP is at 5.3%. It's super elevated. And that, there's going to be a fiscal impulse from the big, beautiful bill, and AI productivity gains. I think those are going to be substantial. And so, from the economic standpoint, I think things are okay. Where there are some concerns, and rightfully so, is in the geopolitical arena, where, tensions are really elevated. I think the U.S. is on the cusp of intervening in Iran, probably in the next 48 hours, given some of the communications that have been sent to diplomats and some of the military movements and the price action today and things like, equities and vol and gold and oil. So yeah, you've got a shifting, geopolitical dynamic, and taking a step back, I think the world order that has existed in my lifetime has probably fundamentally changed in the last 12 months, and so you're starting to see Europe kind of detach from the U.S. Particularly over some of the Greenland stuff. You've got the rise of kind of imperialistic tendencies out of the U.S. in terms of just potentially taking oil from a sovereign nation. And so it's very there's a lot of tension.
They even put out the White House in their updated strategy document. I know a lot of people didn't really have a chance to read this. I think they put it out in November, but they did say that they were moving from a world. The country, the national strategy is moving from a world of global large power competition to one of spheres of influence, which is sort of an admission and adaptation. Now, whether they're adapting to it or enhancing it is I think perhaps for debate, but it's an admission that it's a more realist foreign policy based on power and projection rather than international agreements and old, sort of big blocks of allies. So even leaving aside any particular specific recent event, there's no doubt the world is fracturing into a more multipolar world. Is that the main impetus and catalyst behind the rise in gold and the rise in silver and commodities?
That's part of it. I think there is an emerging narrative, and it's been happening for the past couple of years, of just de-dollarization.
Yeah.
Right. Not being so tied to the U.S.
and we've talked about the deleveraging and tariff tantrums in April and how the DXY actually depreciated during that. People
Correct.
looked for non-dollar hedging instruments for one of the first times ever.
And then you also just have Trump proposed a defense budget that was $500 billion higher.
Yeah.
And so that has to come from somewhere. And then the Supreme Court arguably is going to rule down tariffs. And so you're not going to have
That is the expectation for a lot of analysts I've seen that they will.
And the prediction markets,
Yeah.
like the legal analysts as well as the prediction markets, are saying that
So that's less revenue.
That's
I mean,
that's
and other
I
issues,
think
but-
the run rate's around $300 billion or something like that. And so so you want to spend $500 billion more dollars. You also potentially want to send Americans $2,000
Right, checks and
tariff
stuff.
checks. And so the math doesn't add up, and the math hasn't added up for a while.
Yeah.
And so I think people are looking to hedge themselves from that risk because spending money endlessly and pretending like tariff revenues are going to cover it can only go so far. And I think if people were just take a step back, and if you denominated your life in gold terms, or silver terms, or any of these precious metals that have been rallying a lot, you'd be like, oh my God, my wealth is fading, because the S&P last year, in gold terms was down 35%. Right. And Bitcoin even, right, relative to gold, it was
Right.
down a lot.
Yeah. It was.
And the reason why people like gold is, one, it's been around for a long time.
This is what
The
I was
Romans
saying
were
to you before.
using it
That's
for
what I
money.
was saying before was in these times of uncertainty, humans say, well, what should I invest in when I'm uncertain? It's me like shiny rock.
Yeah, but you boil it down. It's a flight to quality.
It is, and it's been around a long time. Hold on, let's talk about Bitcoin just before we wrap here, because I know we're short for time. But interestingly, today as we record on January 14th, Bitcoin is up pretty substantially while equities have been languishing. Not that that means anything necessarily long term, but gosh, I haven't been able to say that in quite a while. Bitcoin, as you can see over my shoulder, trading at 97,360 as we talk. That's the highest level since early to mid-November. So people feeling decent about it. This is not out of line, I should point out, with sort of what you've been saying, which is a structural medium-term trend lower, but that could include reversions. And you've said that you want to see Bitcoin retake its 50-week moving average
to get
and
constructive
also
again.
to get generally bullish in the trend. Which wherever it is, also another here, over 100, 105, and hold it as support. Does this? My view of what you've said and this price action is that this is in line with what you've explained. But how do you look at this Bitcoin price right now?
To be honest, I'd look at it as a tremendous opportunity to de-risk if you're still long, and if you're keen to play for downside, this is all you're getting into very positive risk reward territory. But fundamentally in markets, for things to go down a lot, people have to be in the trade, and you need price to move higher and folks to feel good in order to accumulate longs, potentially accumulate leverage.
Right, they can't sell if they don't own, and a lot of selling has already happened.
Correct.
Yeah.
And so what you've seen happen to start the year is just the basic calendar effect, where there's a lot of folks whose mandates include Bitcoin and other crypto assets, and going into the start of the year, folks were underweight. And so when you have a move higher and you're underweight, it's okay if it only moves up a couple percent, but when it starts moving up 10% plus, you're almost forced to buy back in, because you as a manager that's expected to
and you're even more underweight.
Yeah. And so I think you've had liquidations happen, but I still think there's a little bit more room for this rally to go on in the near term. But that 50-week moving average, this 100 to 105K area, 98 to 105, that's kind of where I would expect the rally to stall out. And so, I think we're following, that path pretty well. But yeah, right here, right now, I think it's time to be cautious. Back to your point, Bitcoin is fundamentally still a risk asset, and maybe that is debatable and for certain people, but I think it's risk asset first and foremost until proven otherwise. And right now, you have the NASDAQ that's down 1.5%, was down almost close to 2% today, and Yeah, like we've seen Bitcoin underwhelm in an up tape in stocks. God forbid you have a down tape in equities. Like, how's that going to look? Um, and so, yeah. And then on top of that, like Clarity Act, like if that doesn't go through, how does the market perceive that? That probably puts an end to the legislative agenda for crypto for the next
Yeah.
3 years, basically.
Well, it depends on the outcome of the midterms, but definitely for this Congress. Well, not definitely, but likely for this Congress. I agree. I mean, if you don't get it now, like there's other stuff that Congress has to work on, and the calendar's pretty short. So
Right.
this is sort of the last big push, I think.
And even if it does go through, which, hopefully it does, depending on what's in it, but it's still not like crazy relevant to like where Bitcoin is going to trade in the next 6 to 9 months.
I think that's right. I think most of the stuff, just to, from a fundamental standpoint in the bill, and generally in various versions of the bill, doesn't really touch Bitcoin specifically that much, right?
Yeah.
Tokenized securities, yes. DeFi, yes. What is a security and what is a commodity? Yes, but Bitcoin's firmly a commodity, so
Yeah,
I agree with that.
And I just think that there's just been too much pain felt for folks, in the last couple of years in crypto. I mean, Octent alone liquidated, pretty much anybody that ran long leverage in crypto. So they've been burned. The institutional community has also been burned, by last year's price action. A lot of folks went in being like, this is the year, and it didn't end up being the year. And so I think there's a lot of scar tissue that you have to overcome. And I think that's a really high.
Some of that takes time.
Yeah.
It just takes time, too.
And it's also, I mean, just think there was the long leverage guy, and then the guys that got in the DATs, they're also,
Yep.
hurting a good amount.
That's right. That's right.
And, these DATs have less firepower to, like, effectuate the market, at least right here, right now.
Yeah. Well, there you have it. We'll check in with you again next week. Of course, my friend Beimnet Abebe from Galaxy Trading.
Thanks for having me.